Let's get this tweet out. Out. Copy the link. All right. What's up, everybody? No idea where that chat went. There it is. All right. Hey, Sam. How's it going? How's your weekend? Oh, trucking full. My weekend is great. Productive. Just like last week, really busy with a lot of work in terms of what I usually do compared, you guys hear me talk a lot about making sure you enjoy your life, right? And always be grateful, those types of things. But there are weekends where there's work that's got to be done. And last weekend, this weekend are definitely 2 weekends in a row of just that. Work needed to be done. Work is getting done. But it's all for, the right reasons. How's your guys' weekend going? What's up, Cook? Cook, how you liking the True Trader room? You've been in there for a few weeks now, I think. Yep, I hear you, man. Honestly, I feel like even though I do spend a lot of time like golfing and hanging out with my kids and working out, stuff like that, I would really say that I could make a strong case that there really is not a single day that ever goes by where I don't do some work, right? Like I work every day, but I just make sure that when I'm not at work, that's when I turn off, right? I tune out and I focus on non-work related stuff, and I'm fully present for my family and my kids as much as I can be. Sometimes that's a tall order. Oh, you know what? I just realized I went live a few minutes early today. I don't know why I did that. I think I thought that it was 1:55 my time. Nice. I'm happy to hear that, Cook. Yeah, that's a tough job Benito has, because as a mod, as the guys that do the live stream in the morning for the opening 30 minutes, I don't listen to the other traders, right? I'm in my own world, kind of just zoned in, but he's got the tough job or task of figuring out who to focus in on when they're calling trades, and how to kind of commentate at the same time. I definitely don't envy him or his job. That doesn't sound fun to me. But he does a great job. I'm happy to hear that you're happy with it. Nice trucking. I like to hear that, man. So since I went live 5 minutes prior to what I typically do, I think I'll go ahead and just kick it off. We'll start 5 minutes early here. People will kind of come in a little late, I guess, if they're just used to tuning in at 5 o'clock market time. If you got the notifications turned on, like we always tell you guys, then you don't miss this, right? Like, subscribe, turn on notifications, and on days like today where I'm an idiot and I go live 5 minutes early because I'm not paying attention, you'll still make sure that you're here for it. Also, you can follow me on Twitter. If you don't already, it's just at Ricky Analog. Follow True Trader on Twitter at TrueTraderNet. If you guys can do me a solid real quick, if you're on Twitter, retweet the tweet I put out about the live stream and share it on Instagram or Facebook or wherever you guys have people that might be interested in markets. But yeah, we'll just go ahead and get it started, guys. This is the Sunday Prep. I'm Ricky Analog. This is for the first week of August, man. I can't believe it's August already. So, as always, guys, if you guys don't have a broker that you can trust, check out Cobra Trading, guys. There's a link in the description. It'll get you 25% off your commissions. That adds up a lot, I'm telling you right now. And a free month of whatever platform you choose. These guys are hands down my favorite broker ever of all time. I've used them all. I still have, I think, 6 or 7 different brokerages. I keep brokerages open at different places. You always want to have backup plans, but these are my guys. These are the dudes, all right? Spikeet, I'll talk about them a little more today because we're going to get into some of the stuff I use them for. These guys created a program or a platform that allows you to pull historical stock data. I used to track setups manually in Excel. It took hours upon hours upon hours every single day at the end of the day to pull in manually all the data points of certain stocks that met certain criteria. These guys made it so not only does it take almost no time at all, but you can retroactively cast a large net and you can get your sample size today. You don't have to wait for months to pass before you have a large enough sample size to analyze. And there's another link in there in the description for them as well if you want to try them out. Scriptstotrade, I use these guys for indicators. Dude, these guys blow my mind every time. They create indicators for Thinkorswim and TradingView. They have a whole suite of ready to go indicators from everything from volume forecast to abnormal volume to gap stats to you name it, they got it. And if they don't, they can create it. They can custom make you whatever you can dream up. They are amazing. Check them out, guys. And we have another really, really big week of earnings. Last week was amazing. Last week was full of all kinds of moves, lots and lots of activity. And it's not going to be any different this week. It's going to be a really big week full of earnings. Make sure you guys familiarize yourself with the names that are reporting this week so you don't get sandbagged. Make sure you know if you're looking to trade something, if they report later in the day or if they reported that morning. You know, you don't want to not know. All right, guys, and you have no excuses. This is Earnings Whisper. You can follow them on Twitter. They have a website. This is all the big names, but there's obviously a lot more people reporting than just that. So make sure you guys know who's reporting if you're going to be trading certain names this week. All right, so the title of the YouTube stream or the live stream this week, the Sunday Prep, is what? It's refining your system and proper stock selection techniques. So what does that mean? Well, if you guys paid attention last week we talked about context. And context is the ability to define, what is the backdrop of why your trade should matter today, or this setup should matter, right? It's not enough to just say, I'm going to short something because it's gapping up 45%. There's so much more to what's happening than just that, right? Just like we talked about last week, there could be, you could be gapping into levels of resistance. You could be breaking out. It could be like on a 3 or 4 day multi-day run and now it's gapping up, or it could be the first day and it's gapping up. Those things matter, and until you define those things, you're really just kind of throwing mud at the wall and hoping something sticks. So last week we talked about defining that context. This week it segues perfectly into what I want to talk about, which is refining that, because the initial definition of the context is just like what I talk about when I was describing Spikeet, right? Casting a wide net. Whatever the context is that you want to track. So the one that I've been messing around with lately, and so has a lot of the guys over at TrueTrader, thanks to Adriano, was things that mostly large caps, right? Large caps that close in the upper certain percentage of their daily range, and basically never really give a big retrace and have a certain percentage gain on the day. We want to look for those for the next day to create a context where it makes the shorts squeeze out, right? What we've been calling in the room when shorts scream, and for lack of a better description, right? And that's exactly what it is we're trying to define. What is it? What is the situation that would make it so that the shorts tap out? Because when they tap out, oftentimes there's a really good reversal in there and we want to capture it. But it's not enough to just say that. We need to get more granular. And so last week the context was, well, how can we kind of narrow that context? I did it for myself, and you're free to do it however you like. I'm never going to tell you guys that your way's wrong and my way's right. That's not what it's about. For me personally, it's about making it work for me. So in order for that to work for me, I had to define it more narrow, or narrower, I think is the correct term. So what did I do? I said, okay, well, I needed to have a minimum of 1.5 million shares traded on average per day, right? I don't want low liquidity names. I want names that have range. So I only trade names that trade $1.50 or more for their ATR. But I kind of loosened that a little bit for this because we're looking for something that's going to squeeze, so it may have bigger than average daily range. So I started with a minimum average daily range of 80 cents. Then I also added some things in there like the necessity of it to gap up the next day. Not only must it gap up for me, but I don't want it to retrace off the open. I don't want to flush off the open, because what's that do? That lets the shorts out easy. So I made a criteria that says off the open, it can't retrace any more than a certain percentage of the move, and it's gapping up, right? So I also wanted it to move upwards off the open. So I also made a criteria in there that says it needs to move at least, I think it was 0.6% within the first, I want to say it was the first 30 minutes of the open. I want to see it move up, right? And that gets you narrower. That gets us closer, but it's still a really wide net, okay? And this is why I love Spikeet, because I was able to just simply put that criteria in, and I pulled all the stocks that met that loose definition, that context of that setup. I could go back 20 years if I wanted, but I don't want so much data that I'm inundated, right? To start out, I just started from the beginning, January 1st, 21. So about a year and a half, a little more than a year and a half of data, right? And what I was left with was 500 plus names, tickers, symbols and it gives you the date. We'll get into it a little more here. Let's go ahead and check this out. So this is an Excel sheet. This is and now listen, I know that it might be making you squint right now because it's pretty small on your screen. And at the same time, like, I'm not trying to make it super easy for you guys to see all the way, like all the minute detail that I've got in here. And I even have certain columns hidden, right? This isn't about giving you guys a cheat sheet. I'm trying to show you guys a process. So this is the raw data that was pulled from Spikeet. And you'll notice, so this last column here, I'll talk about it in a minute. But that's a column I put in, right? And so is the second to last column, which is called setup notes. But we get further down, it's by month and by date, right? You see the ticker and all the data points I've been able to pull, right? I got open, high, low, and close of the day where it's a target. The volume, the previous day's open, high, low, and close. The previous day's volume, the 10-day average volume, the OS, the market cap, the time of day it made a high, the time of day it made a low. All kinds of data points, okay? And I don't have to track this manually. This was done within, depending on how long it takes you to personally use Spikeet, this can be done in minutes, okay? And there is 520 results where they meet that loose definition of what it would take to create a setup where shorts are going to be sent screaming as they tap out. Whoops, didn't mean to do that. As they tap out from swinging short the previous day, right? And so I guess I should have kind of said that, right? That was what the thought process was that Adriano was giving the room. He said, think about you swing something short overnight because you were shorting it because it was up over 6, 7, 8%. It's a large cap on the day. Maybe it was up 10%, 11%. Like what? Amazon was up freaking 11 or 12% on Friday. Okay, so these things happen, but they're not normal, right? There's like the whole normal distribution of like where stocks will typically be, and it forms a bell curve, right? And those tail ends, like the really, really big down days and the really, really big up days, are the extremes. And we want to kind of focus our attention on the things that don't happen quite that often. So something that closes strong and never really gives back much of the move, if you swung that short overnight, the kind of emotions you would go through as the night progressed. You get into the after hours, then you get into like even the after hours are closed, and you maybe are like, it's going to come back tomorrow. It'll come in. I'll cover off the open tomorrow. Then like towards right before you go to bed, you're thinking, man, I hope, I can just get out for a small paper cut loss or whatever. And then you see it gapping up pre-market and you're going, man, please flush off the open. Please flush off the open. And instead of flushing off the open, it pushes. That is the emotional situation that the shorts are in. And we want to capitalize on it. So that's what this is getting us. These are those candidates. But here's the thing. A lot of people will pull this kind of data and they'll kind of look at it and they'll look at the charts and they'll go, yo, I think there's a playable setup in here. And that's as far as they go with the work. There's a lot more work that needs to be done, guys, because within that context, you're going to have some that actually give you an actionable setup. You're going to have some that give you a setup and still don't work. No setup is 100%, okay? You're also going to give some that just don't give a setup at all, okay? So that's what this last column here is these are, and in fact, these come from another page in here. I'll show you. This is what I call the Bible. This is where I go through these one by one, right, in order. And I ask myself, I'm looking at charts and I'm saying, is there a setup? If there's a setup, it goes in here. Then I track out, what does it do? When does it give the setup? What is the target? Does it hit the target? What would the P&L be? Where would my stop loss go? How much position size am I taking? And then I track it over. Everything is over here on a variables page where I have assumptions here that I've kind of hidden. I don't show those different tactics that may be applied to the risk management of it. And it shows you how it compounds, right? But the crux of this is that we are tracking these setups, and then from here, it's pulling this final column, and it's telling you whether it worked really good. If it's yellow, it means there was no setup. If it's red, it means it failed, like there was a setup, but you still lost money, which that happens, okay, and that's fine. And then there's these green shaded ones that say so-so, which those are ones that gave a setup, did not go to the target, but you stopped out. You were able to stop out before your full stop because something else happened meanwhile, and that oftentimes still leads you to a green trade, but not necessarily like what you would call like the perfect outcome, the optimal outcome, right? So once you have that, and here's the thing, I've only got the first 2 months of 21 done, right? 2021. I got January and February here, so I still have a lot more data to go through, but that doesn't matter because I'm not trying to show you the answers. I'm trying to show you how to get your own answers, right? So from here, let's say we had all of the answers, or let's say we had all the we've gone through all the candidates and this is completely filled out, okay? So you have to kind of stick with me here and just pretend like it is. What we want to do then is we want to start asking ourselves, what do the winners, the ones that really work well, have in common? What do the ones that fail, what do the ones that give the red have in common? And the easiest way to do that is to look at the data and sort by a column, right? Let's say the volume multiple, meaning like, okay, the 10-day average volume on this NCTY was 13 million. On that previous day, it traded 49 million shares. So it was almost 4 times the average volume, right? Let's say we sort by that, largest to smallest. What you'll notice, again, you're not going to see it here because we don't have enough sample size yet, but you're going to start to notice if you do it correctly, there'll be clusters. And let's say we sorted by the volume multiple, and the vast majority of ones that had the beauty or the dark green, the optimal outcome, were all up near the top. And then you scroll down to the bottom, and the bottom had most of the ones that fail. That tells you that that volume multiple matters. It means that that is a key element to your setup. And remember, I'm not saying that that is the case in this situation. It's not, right? We have a lot of ones that work really well down at the bottom, and we have, the ones that fail spread throughout. So it's not. That means volume multiple so far for what we have is not a key element to a successful candidate. And you have all these different data points to choose from. And trust me, there's more data points that you can grab. This is what I'm working with right now. So maybe we sort by market cap, smallest to largest. Does it give us any sort of clusters? Previous days gain percent, largest to smallest. Now this one, kind of, right? There's definitely more green at the top, and it's more sporadic throughout the bottom, right? But what you need to realize here is what you're doing is you're identifying filters that because we don't know what we don't know. And this was something that was taught to me by one of my mentors. That's one of the most important concepts, is that, like, you'll hear people on Twitter talk about all kinds of myths. We call them Twitter myths, right? Like, and a lot of people take them at face value because they don't know how to test it through the numbers. Let's say, a common myth was that a certain float, meaning the outstanding shares minus the insiding holdings and affiliate or the large affiliates. Let's say people on Twitter tell you if it has less than 10 million in the float, 10 million shares in the float, it's not a safe thing to trade. It's not a safe vehicle to trade. Well, if you just hear them say that on Twitter and believe them, and then you don't go and find out for yourself by seeing, does your setup tell you that, then you may be missing out on trading certain things that give you really optimal trades, and you wouldn't even know it, right? Maybe there's something in here, and now I don't have float in here. I have OS, right? Let's sort by OS. So, NCTY up here, 15 million in the OS, willing to bet it's a low float, right? And this is back in early 2021. Anybody who's traded this thing knows that NCTY has some really big, crazy moves, parabolic days. But what if I wrote that off and never traded it? Well, yes. So this was actually 2 different days, right? One was in January, one was in February. One day it gave the perfect outcome, one day it failed. But what if I had like 10 instances of this ticker over the last few years, and 9 out of the 10 gave perfect optimal outcomes, but I wasn't trading it because I was writing it off because somebody on Twitter said you don't trade things with small floats. This is the way you prove or disprove the Twitter myths. This is the way you prove or disprove whether certain criteria matters to your setup. Because again, you don't know what you don't know. You can't just believe what people say. And you have to understand what someone's saying. Do you even know what they're saying, what context they're using it in? What's the setup they're applying it to? Because, maybe they're saying you don't trade on the short side day one low float stocks, but maybe your setup you're tracking is a long trade, or maybe it's a day 3 short, who knows, but it might not even be the same context that they're applying it to, so you don't know. But what this does is it gives you the ability. So let's go to the variables page and point something out, right? If I don't filter this out anymore, if I just trade just the wide, loose context that we've already applied to it, whenever it gives a setup, it's trading at a 70% win rate, give or take, okay? And it's profitable. But, one of the things that you should always aim to do is, can something be made better? Lance, if you guys don't follow I think it's the one Lance on Twitter. I might be wrong. We'll put it in the description later just so you guys can find him for sure. But Lance actually had spoken pretty closely correlated to what I'm talking about some guy saying like, oh, I trade IPOs. I trade IPOs and I crush IPOs. But, I only have a 20% win rate on them. But the ones I'm right on, I crush. And the ones I'm wrong on, I lose whatever I'm willing to risk. And he goes, but what you're not hearing is that you should be focusing on what is it about the ones that you're losing on, and what is it that's similar about the ones that work. And it turns out the ones that work were the hot IPOs, or some sort of similarity that they have that you're not identifying. And what you're able to do is, if you're able to cut out that 80% of them that just flop and you lose money on, now your batting average is way higher, your expectancy goes through the roof. So even though this has a 70% win rate, the goal here is to identify what it is that the ones that cost me money have in common and get rid of them. Filter them out. What are the ones have in common that work optimally? And filter them so that I only see those. That is how you select stocks properly. That is how you make it so you take something that has a 70% win rate and a really nice expectancy and a nice upward sloping P&L curve, and you make it parabolic. You make it a 90% win rate, because you're cutting out all the dead weight. You're getting rid of all the crap. And you need to do this to all your setups. Everything needs to always be optimized. So this is probably something that a lot of you guys have never even considered doing in your trading. I highly recommend it. It was something that was taught to me a long time ago by one of my mentors, and it was an eye-opener for me. I hope it's an eye-opener for you. I hope it's showing you the way that you can use data correctly, because yes, you could be a guy that trades a 70% win rate on a setup all you want and make money, but are you improving? Are you refining? Are you figuring out what it is that makes some stock candidates supreme compared to others? So I hope you guys can take that and apply that to your trading. That's all I really wanted. I probably talked about it way longer than I wanted to, and I apologize for that dragging on. But let's get into the actual Sunday prep, guys. Neither I, TrueTrader, or any of our representatives are licensed as or registered as security broker dealers. I'm not a licensed financial advisor. Nothing I talk about is a solicitation to buy or sell any stocks. It is simply for educational and entertainment purposes only. All right, guys. So here is your ES chart. Welcome to August. The first thing I want to know, okay, we had the weekly long, or the daily chart triggered the long to end the downtrend, right? We're lower high, lower low, lower high, lower low. Finally, we get this push down, the push into the 20-day, the higher low. It fails to go lower right here. And then we break above this, let's call it 39.50, okay? And what's the target? Well, what time frame were we extended on? We were extended on the weekly. And now we're back at the weekly's level of balance. Remember the Sunday prep, we talked about balance and imbalance. We're only going to stay extended from the weekly 20 for so long before we seek balance back at it. We're there, okay? We made it to the target. Now, first thing I want to point out is we're going to get a new monthly candle, okay? So a break of last week's highs is not only the possibility of a break of last week's range, but it's also the possibility of beginning the first lower high on a monthly chart that we've had since back in March. Now, we don't know it's going to be a lower high, right? Obviously, this could just rip to all-time highs, but I find that hard to believe, right? We haven't had a monthly bar break up since March. And when we had it in March, it put in a lower high, and then we made new lows. So we are starting to see the possibility of that happening again. At the same time, we're pushing into the weekly resistance. We're in a downtrend in the weekly time frame, right? No matter what the daily chart's doing. The daily chart has now ended its downtrend, and we are pushing, but we are pushing into plenty of overhead, okay? And on the weekly time frame, there's no debate. We're still making lower highs, lower lows, lower high, lower low. This is a push up to your trend, to your mean, to your level of balance. And from here, the exact same process needs to play out that played out on the daily time frame to end the weekly downtrend. So it's going to take a while. It's not something that's going to happen overnight or this week, right? What I would, if we were going to end the weekly downtrend, you would like to see this try to push lower and fail to do so, and then take out the recent highs. What would that look like on a monthly chart? Well, it's probably going to take a few months, because in order to put in a higher low on the monthly time frame, we would have to go break July's lows without taking out June's lows. I find that really hard to believe that happens. I think if we come all the way down here, it's hard to see a higher low forming on the monthly chart. The one way I could see it happening, or I see it happening more likely, is a narrowing of the range. Every monthly candle is so damn wide, right? This is very volatile price action month to month to month. If it narrows, I could see having an August and maybe even a September get tighter. And then we could have a month like October maybe try to pierce down and try to take out some lows and put in a higher low and then set us up to push. And what happens when you get some monthly candles that are narrow? Well, remember, that's a month. Each candle's 1 month. So you're building a base, right? If we can get a 1 month candle that narrows, we are building a base. And bases are great for pushes. It's really hard to see a downtrend, bear market, whatever you want to call it, ending until we build some sort of base for a healthy push. Basically a digestion of this big move down. Can we go straight back to all-time highs? Of course we can. I never write anything off in the stock market, but the more likely scenario is a narrowing of range and a building of a base if it's to be healthy. If we don't do that, then I feel like we probably do just see a lower high on the monthly time frame, and we head lower. We get another leg down. To be honest with you guys, that is what I see being the higher probability situation. Again, doesn't mean that it's a 100% probability. It's just, I feel like it's more likely that we put in a lower high on the monthly chart and probably try to test lows and go lower. We'll see. Again, it's not about having a crystal ball. It's about creating if-then statements so that we as traders can make money in this market. All right, so the key levels I have written down. Support levels. We'll start with support. And again, I feel like I must look really stupid because I'm obviously reading from my notes, but I just don't want to spend too much time trying to identify them by eye after I already did this on Friday. Support 4,016. 4016 is what I wrote down. And it's also, so basically, why did I use 4016? Is because it was the breakout level from right here. Okay, the higher low and then the push. So a retest of that. But again, these aren't just like written in stone levels. This is an area. I also like the fact that it lines up with 4,000, which is the psychological round number, as well as that quarterly and annual pivot right there, right? Below that is going to be this 3950 and the 20-day and the 50-day combo kind of area, which is also lining up with where that low was, right? That swing low, okay? Now, I don't have any alerts set here yet, but trust me, later on tonight, I'll go through here and I'll put all my alerts in case you're wondering. Yeah, I forgot to put the alerts in. Below that level is 3,800, and that's the last one I have written down, which is going to line us up with this trend line here and kind of these recent consolidation areas. Above the resistance levels, 4170 is going to be the previous week's highs, and it's also going to be your monthly high as well. That's going to be July's highs and last week's highs. We ended on the highs. I don't necessarily think those hold. I think we push higher, just like when I see a daily candle close at the highs, I feel like you're going to see continuation the next day. If I see a weekly candle close at the highs, I feel like you're going to see continuation. If I see a monthly candle close at the highs, I feel like we're going to see some continuation. So again, I will watch to see how we act against last week's highs. Granted, we don't gap up in about an hour or so when the futures open, but above that we have 4,200-ish, 4,200 to 4,230, and the monthly 20 up here. And then above that is 4,300, which is going to put us into the 200-day and these recent highs over here. Just so you guys can visually see that, okay? All right, and that's it. Those are my levels for the ES. We're going to move on to the NQ. So NASDAQ was able to get the monthly bar break up in July, right? So what we were just talking about with the ES doesn't necessarily apply tit for tat, but it does still transfer pretty equitably, okay? So just to note, we did push above June's highs in July. Let's see, what else did I write down? Exactly, I said per the usual, same thoughts I just gave on S&P apply exactly to the NASDAQ though. So let's look at the key support levels first. I have 12.7, and again, just like where we got those from the S&P, right? The recent break of those highs, a retest. And you'll see like on Friday, we kind of already tested down those levels. I still think if we flush down there, a first test, especially if it's emotional, might give a good opportunity for some bounce plays on individual names. Below that, we have 12.2, which is this level here, which lines up with the 20-day. And pretty soon you'll see the 50-day start to curl up as well. And then below that is the 11.9, which is kind of this monthly pivot, this uptrend, and this 12K level. So 11.9 to 12. 12 being the psychological round level, right? You guys hopefully have heard me say that enough times. You know that those play a large part in my trading. Round psychological levels. Above resistance 13.5. Obviously we have last week's highs. Again, just what I said about S&P, same thing. We close on highs. I feel like there's going to be some continuation. This 13.5 is this annual pivot, and it's also lining up nice with this down descending trend line. Again, trend lines are just visual guides for me, but it also lines up really nice with these recent highs over here, right? Now, granted, the pivot in that line, they're a range. 13.5, somewhere in there, okay? If you guys don't understand how to watch for reversals, you're going to have a hard time playing against levels, right? Because you'll be like, well, it kind of went through a little bit, or it didn't quite get there. But if you like watch for lower highs and things to risk against, you can see things turning, and you don't have to just be playing guessing games, guys. Above that level, I have written down 14K, which is obviously the round psychological level, and you're descending 200-day and also some recent levels from up there. Let's take off some of these pivots and stuff and just look at some recent price action, right? So anywhere up in, you got the monthly 20, the 200-day, those recent highs up there, actually not too recent, but back in April, right? So any kind of big moves up into those levels, I also think are going to really give you some good levels to play against for the shorts. Bitcoin. And we can turn to, I guess we don't need pivots for the Bitcoin too much, but this thing is behaving pretty well. And that's kind of what I wrote. I think that's what I wrote down. I feel like we're going to test that 25K sooner or later. I still think it's going to be a big level. If it reclaims, I would definitely be watching for it to hold that level. It's also a psychological level. But above that, you still have this 28K level, which is going to be, you know, that lots of price history there, right? You see it here, came down, really held it. So the first real test of that from the underside, I think, is going to give it some trouble. But again, remember, it triggered the same daily long that ends the downtrend as the ES and the NASDAQ did. And what is the defined target on that? Well, it's the time frame you're extended on. It's 20 for me, which is the weekly. So who knows if we attack the weekly 20 or we go sideways for a while and that weekly 20 comes down to the point where now it's going to line up with that 28K level. But regardless, we do still have room back up to it. Again, if we don't get to the target and we lose those lows, it's a failed long. That could give you a pretty ugly leg down if we don't hold that 17. I'll be pretty precise here. Let's call it 17.5. So that's Bitcoin. So we're going to get into the sector analysis here. I'm going to look at the ETFs, and we'll go ahead and go to bar chart real fast. We'll check out the sector matrix. All right, and obviously everything green. Energy was the big one. You know, those are pretty big weeks for all three of these other ones, right? Actually, and utilities, lots of strong moves, guys. Lots of strong moves. But remember, a strong move doesn't mean that we need to be getting long that sector. We need to look under the hood and ask ourselves, where are we overextended, or are we is there levels to pull back to where I would look to be long? Those are the questions that need to be going through your guys' head. And so that's why we use the ETFs, okay? All right, so XRT over 6604 can kill, what did I write down? Can kill this daily downtrend and send us up to the weekly 20. The problem with that is the weekly 20 is so damn close, right? It's right up there, right currently just below 68. But over 6604 can get you that push up there, and then obviously things can go further. But that's the expected move, would be up into the weekly 20, which, as you can see, all the pushes to the underside of the weekly 20 have caused us to sell off further and head lower. Did I write any other note? That's the only note I made on that. XLF, this one I still think is behaving really well. I think we're going to get to the weekly 20 on this one. You know, pullbacks held. Now we're pushing again. Feel like up into the weekly 20 is going to possibly give us the ability for some shorts or some near-term pullbacks. I wouldn't be getting long up here. Again, if we're in a bull market and I see moves like this happening, it's way different. But in a bear market, the last thing I'm going to do is pay up for anything. If I'm getting long anything, it's on pullbacks to support. I am not chasing strength anywhere. Does that mean I miss moves? Of course. I don't care. I'm not going to be holding bags on these things because I paid up, right? Real estate. Big move up into the weekly 20. Remember, we talked about this one. Had the trigger. Now it's at the target. It's also into the underside of the monthly 20, and it's also right into some recent levels, right? So we'll see if this, again, I don't trade this sector that often. There are a few names that have the liquidity and range that, you know, when we get moves like this, I might start to make exceptions and start looking in those sectors for individual names that have setups. XLV, we finally got that 134 push, kind of rejected. I'm waiting to see, do Thursday's highs put in the near-term top, or do we try to reclaim that 134 level and possibly start trying to get another leg up? If we reclaim it and start to hold, I'm not interested in shorting anything in this sector. If we do start to make lower highs and start to roll over, I will watch it. We'll see. This is another one I rarely trade, the material sector, but this move is right into really, really key resistance. That this used to be really key support. We got under it. Now we're coming into the underside of it. And not only are we coming into the underside of it, we're doing so after 3 big days up, gappy days, and big pushes right into the underside of the 50-day, right? So if you find a name in this sector that has the liquidity and the range and a good setup, it does look like it could be ready for some near-term shorts. Same with industrials. A little bit higher on this one is what I would like. I'd like this mid 97 area. But again, 3 big days. We get a 4th one. Come Monday, this thing rips up into 97.30, 97.40. I'll be looking at this sector for individual names that are getting extended for fades. Utilities had a crazy week, right? Big gap on Thursday and some follow through on Friday. We're back above that trend line that was, you know, again, just a visualization, but we still definitely have some key resistance up here. Remember, this was where we had that breakout up here. See how that was support? Support came from the underside. The underside killed it. So a retest of that, maybe I'll look for something like a Duke Energy, or, you know, there are a few AEP. There's a few names in this sector that have the liquidity and range, but it would need to push up into the 75.50 area for me to want to short it. Does that mean maybe Friday's highs put in the highs and this rolls back over? So be it, right? It's not the most glamorous sector to be trading. Also not one of the most, not if you're a perma bull and you just want this bear market to end, not the sector you want to see performing that great either, right? Staples had that big Thursday move into the underside of this trend line that we had lost. And it's also kind of into where this breakdown happened here. You see the pull, the big yank from the highs, and when it tried to bounce, these were the levels that it lost. Whoops. There we go. So these were the levels that it lost, it killed, and when it came to the underside, stuffed. Again, just like we just talked about, was that on XLU? No, it was industrials, or yeah, it was the industrials. So a retest of those, it's very similar, right? So what I was saying is, you know, you had the big move on Thursday, but on Friday we had the gap down, and you had this really narrow inside day. So I am still waiting for more confirmation on something like this, where I want to see, do we push, test Thursday's highs and then stuff, or do we just start to roll over and come back into support, where I may actually look to get long. There's this really clear consolidation area right here where we broke out of, right? So, and the 20 day is going to be right there. So it's kind of, at the moment, a little bit in no man's land. Lots of names to trade in this sector, but I want to see a little bit more clarity first. XLY, this one, we're definitely getting extended. Problem with this one is, again, it could just pull back to this, retest this breakout level. So I'm kind of thinking I'd like higher now. First spot I'd look would be this little pivot here that we tried to balance and stuff. So 169, 170. If we can push a little further, definitely names in this sector that I would be looking for. Communication sector, again, everything had a huge week except this, right? Look at this. This narrow coiling. Now, typically you'd be like, oh, that looks like it's getting nice and tight and looks like it's going to break out of this wedge and shoot straight up. Not when it's screaming relative weakness, right? The whole market's ripping, and that's what this thing is doing. Come on. This thing, to me, I feel like under 5460s, 5450s, and this thing could really unravel. So I'm actually, because of this price action when the whole market was rallying, I'm looking for this to be the sector where I think we can fall apart, come down lower. XBI still holding on to these levels, kind of just flagging out up here. Again, I like this sector. It's been behaving very well. But I know all the people, the technical guys out there are probably like, but Ricky, look, isn't that kind of like a little head and shoulders there? Yeah, it is until it isn't. So until we come and break down below this 79.40 area, it's still holding, okay? And so if it breaks there, then I think we come down and we test this 74 area. But as long as we hold, I think pushes over this 84 area can get us going. XLK, again, think we're getting a bit extended up here. I'm looking for higher to better. See if this little pivot area holds, if we can push up here. You got the 200 day, lots of resistance overhead, just like we were talking about with the NQ. So any pushes up without taking a breather first, and I'm looking for names in this sector to fade. Energy and oil, both of them have just been behaving technically so perfect, right? Every time we talk about a level that is important, it holds it to the penny almost. Like the 50 day, these uptrends, like XOP, the way that, retested the previous week's lows there, was holding that trend line. They're just behaving technically perfect. So knowing that, I'm not paying up for stuff. The time to get long energy, the time to get long oil was on those pullbacks. These push-ups are up in the overhead resistance until they start to pull back and give higher lows. I'm not necessarily trying to get short individual names unless they're extended. Like I remember CVX had a crazy daily chart on Friday, right? Yeah, so like maybe something like CVX up into 170s for a fade, but you got to understand that these sectors have been strong non-stop, even while the whole market was coming in from their all-time highs and having months and months of downward moves. Oil and energy were going higher, and they're still behaving really well. So what's that telling me? I'd rather be looking for dips to buy but we're nowhere near the buy point anymore. The last few weeks we were talking about it. That was the time to be getting long energy and oil, not after they make these big moves. This is called FOMO, okay? And if you have never experienced what it's like to have FOMO and buy something, then take it from someone who has. It's called instant regret. You do it and you immediately go, what the hell did I just do? Don't do it in a bear market, guys. Bull markets, you can sometimes get away with it because it's just forgiving, right? Especially on the long side. But in a bear market, don't chase things higher, okay? So that's it for the sector analysis. We're going to get into the individual ideas. We're going to talk about the long setups, and I have a note written down. And what I'm going to talk about real quick before we talk about the long setups is lately I've been discussing these long setups that all have a similar look. Let's just look at a chart like AFRM. Okay, this is a typical setup that we've been pointing out in the Sunday preps. These coiling charts that have come way off the highs, have started putting in higher lows. And if you look at the weekly charts, right, this one's not a great example because a lot of times they'll have room back to the weekly 20. But the weekly charts are coiling as well. You're getting higher lows on the weekly chart. There's so many names, right? So many of these names look just like this, right? Not so much this one. I'm trying to just think of some off the top of my head. But regardless, the daily charts have those nice curling bottoms. This was one back here. Now it's kind of made the move up. So here's what I wanted to start with the caveat with, and that is when the market had not made the big move up that we had made recently over the last 2 weeks, these charts look great. But here's the thing. If you start looking at a chart like, let's see. Let's just look at UPSC because I know that's on the list. You start looking at something like this, and you have to start asking yourself, just like we said with this. Here's a great chart, okay? This is the perfect chart if the market hadn't made the move already. But the market made the move. And if you're still looking at charts that look like this, you have to be asking yourself, wait a second, why is the stock I think looks great have such relative weakness? Now, it doesn't mean it's like heading lower, but it's not going up when everything else is going up, right? The stocks that have been strong that you want to buy on pullbacks are the ones that made the move when the market made the move. At least in my opinion, right? Remember that, guys, this is just my opinion. Please don't get it twisted, right? I could totally be wrong. Communications could rip to the freaking moon tomorrow. But in my opinion, you want to see, if you think something looks great for a long, when the market rips, you want to see it go. And so like something like the communication sector just hasn't gone, showing relative weakness. So that's why it was a little tricky finding longs to give you guys this week, because I can't give you those typical charts that look like this. I have to give you guys charts that are a little different, right? And that changes. So you have to understand those nuances as the market evolves. When the market was forming that base like this, when the market was doing this, yes, everything was getting set up. It was coiling nice, ready to make a move. The market made the move. So if the stock you were watching didn't make a move, you should really have some questions. So that being said, let's get into the long ideas. The first one I'm still in love with is mRNA. It was definitely weaker last week than I thought it would be, but it held the weekly 20. It held this level here that was definitely an important level, and we got the big push up on, reclaim on Thursday and then follow through on Friday. We're still kind of below this descending trend line, but I still think that this is eventually going to go. This thing just looks perfect for a move up, so I'm still stalking it. Whether that's buying opening flushes down into levels, like let's see, what did I write down for the levels? 158.50, which is the monthly pivot, and it's also this. I mean, when you look at this is Thursday, right, where we had that big reclaim. That one, and actually on Wednesday too, it played such a key level, right? It was holding it down, kind of like the beach ball analysis, holding the beach ball underwater, and it was holding it down. We consolidate higher lows, and then we break above it. And I wanted to buy it on Friday. I mean, we were talking about it. 158.50 was on my on my list on Friday. It didn't quite get there. But any kind of flush back down into that level, I definitely want to be there for a scoop. But because of the way the chart's set up, I feel like if we start to go and start to hold trend and put in higher lows and I have defined risk, I'll join trend on a name like this, especially if we can break out of this descending trend line here. But I'd like to see a higher low first. I'd love to see us break Friday's lows, test that Thursday level, and then start to go. So that's, again, I don't get to dictate to the market what the market does. I just get to play the hands I'm dealt. The next name and the last name on this list is C. Citigroup. Again, I like this consolidation here. What did I write down? Not sure if we head down to that 48.50 area, which is like you see the 20-day, the 50-day, and that quarterly pivot. If we were to flush down there, I'm ready to scoop it. Remember, I like that sector, right? I like this sector. And I guess the one thing I forgot to tell you about this sector is that we haven't seen on the weekly chart, right? Ever since we had that failed breakdown, we haven't seen a attempt to probe lower. It's been up, up, up. So I want to see the attempt to probe lower so that we can get that higher low. Because if we do, then I definitely want to participate on the long side in a sector like this. And Citigroup is obviously part of that financial sector. Okay, so remember, a lot of times when you create these weekly plans or nightly plans, you need to be asking yourself, like, what sectors are going to lend themselves to certain biases? Financials look great, but I want dips first. So I'm looking 48.50 on Citigroup. Again, I don't know if we get down there. It may just break out of this nice consolidation. Whoops. I don't know why it didn't work right there, but I mean, you guys can see this. I don't even need to draw this. It may just break right out of that and go, but I'm not going to chase it. Just like I said, I don't pay up for stuff in a bear market. Oversold reversion setups, NEM. Remember, whoops. I don't know what the heck happened there. Okay, this one, I'm not. So there's two setups here. One I like and one I don't care too much for. One setup is the higher low. It was put in on Friday, and then a break over this 47 area can send us back up. I don't really like that much. I'm not that interested in this name unless we come down to these 40s. We get another leg down, it gets a bit more extreme, then I like it. Does that mean I might miss this trade? 100%. Do I care? 0%. Okay. There's so many names to trade, guys. If a trade doesn't get to the level you want, then ignore it. All right, BAX. Same thing. I don't like it here. I want 50. What did I write down? I think I even wrote 50. I don't even think I wrote 55. Yeah, 50. You guys see the 55 annual pivot, and you're like, dude, that's 3 points away. I don't care. I don't want that. I'm looking at 50. You have another annual pivot down there, 49.55. We can zoom way back, and that's the reason I think 50 stuck out to me more, was this area. A retest of that. I mean, this right here, all this price action straight up was nothing. Now, obviously, we definitely have these levels, but we're below them. Okay, so in fact, let's see if it still has those there. Yeah. If this thing were to bounce and retest the underside of 60, that might actually be a great short. And a lot of people will probably be scared to short this because we've sold off so much, right? I got news for you guys. Sometimes the weakest stocks stay weak, right? You don't necessarily be scared to short something like this if it were to work its way back up into that level. And we can take a peek too and see intraday. You see how you have these recent highs? You don't have to necessarily wait for 61.30 or those highs. You could play it against Thursday's high, or not highs, but like the levels that gave it trouble on Thursday, right? So 61. Big old pop up into 61. I might fade BAX, but obviously the idea I was trying to pitch you on is the oversold reversion setup. I just want to point out the level I'm looking at, way far away. BAX 50. Mark me down for I will be interested at 50, not earlier. Okay? So short setups, weak stocks looking for continuation. MOS, not necessarily weak recently, but I'm just thinking I would love to see it get up into this 55 area where we had the breakdown from. It's the first time we've retested these since the big sell-off, and you know, that's about what, 2.5 points away from where we're at. Look at the ATR, $2.35 ATR. If this thing gets one of those parabolic pushes off the open on Monday, I will be shorting this into that 55 annual pivot recent breakdown area. Okay, so that's MOS. UPST. I think this thing just looks really weak, right? I'm looking for a push into 27, 20-day. This came right off the short pops back into the 20-day scanner in FinViz for me. Yeah, not sure we'll get it, but it's still liquid enough, and it's got a $3 ATR on a $27 stock, which you gotta love that. Okay. And the last one in this list is BTU, 23 for the fade. Yeah, so this one is one of those ones where, if you guys remember DDOG from last week, this was that Friday candle on DDOG, right? I believe it was. Yeah, the 22nd. So we talked about this last week. You see a candle like that. Look what happened on Monday and Tuesday. Straight sell-off. So look at BTU. Look at that Thursday candle and Friday. I'm looking for any kind of pushback into those recent highs in this 23 area. Basically Thursday's little area that killed it, and you can just draw a line straight across from Wednesday as well. Anywhere into these high 22s, low 23s, looking to fade BTU. The last section is overbought reversion setups, and there's a lot of names in here that I'm interested in, and some of them are big names, guys. Amazon. I'm very impressed that it held, like, that is a impressive daily candle on a name that you never see Amazon really gapping up 10, 11, 12% and then holding the move the whole freaking day. But what I'm looking for is for this thing to, you know, we don't know if we're going to gap up, gap down. And we kind of like open in these 137 areas. I'm obviously hoping for higher. But if we gap down, I'll probably be looking for any kind of pop into this 135, 136 area to kind of risk against this 137. And see if this can kind of come back in a bit. Yeah, so that's Amazon. There's a lot, like I said, a lot of these names I'm going to talk about in this section are big names. They're liquid. They've got range. I think they're going to provide some opportunities this coming week. The next one is GE. And I wrote down not necessarily overbought. Like, I know you guys are used to me showing you overbought reversion setups where it's like, it just looks like there's no way this thing can go any higher. This isn't that, right? But you guys can see, here was this, what is it, 75-60s, call it 75-60s, is the level where you had the lower high, lower low that sent this thing tumbling, right? We've never retested that. So 75-60, 75-70 is my first level that I'm interested in. But again, I still wouldn't mind it into the weekly 20 up here in the 77s either. Higher to better, looking for lower highs, something to risk against. I think GE is going to have a great trade sometime this week. Apple. Again, not completely overbought or anything. The higher the better. But I feel like, you know, we're kind of getting ahead of ourselves here. I'm thinking maybe 167s. Definitely would be looking for 166 to 167. I did not write down any prices in here in my notes. Let's see. Let me read what I wrote, you guys. This has to have people shitting bricks thinking they missed the lows. That's something about these names, right? Amazon, Apple, Microsoft. Think about, you know, if they don't realize that maybe this is just a pullback or a push up into the bigger picture downtrend on a weekly time frame, if they're so zoned in on a daily chart on the S&P or the NASDAQ, guess what they're thinking when they look at something like Apple or Microsoft or Amazon? They're thinking, and their sidelines cash, right? They're all cash because they've been scared out of the market and they've been waiting for their opportunity to buy Apple. They've been waiting for their opportunity to buy Microsoft. And they see the charts do this. They're freaking out going, I missed the bottom. They're dude, we talked about this earlier, FOMO, right? Anybody buying Apple up into these levels. Now, can they be rewarded for their FOMO? Could they buy this at 165, 166, 167 and have it go 175, 177? Of course they can. But the higher we go without pullbacks, the more likely, the higher the probability that they're going to get punished for their FOMO. And I want to be there for that punishment. I want to be on the opposite side of that trade. So the higher the better. I feel like these are the kinds of names that get people FOMOing in the most, because they're the ones that have people, you know, they've been sidelines with their cash waiting to buy them, and now they're freaking out thinking they missed them. All right, and the last name in this list is ENPH. And again, I don't know if the highs are in, the higher the better. This thing's been really strong after the earnings came out. And I don't trade this name using the TT reversal that we talk about in TrueTrader all the time, because it doesn't behave well with pivots. It's very, very wide range. Like, look at this $16, $17 ATR. And you got to use really wide stops if you're going to kind of trade this thing with like any sort of the TT reversal stuff. But I don't trade it that way, but I will 100% trade this thing by joining trend. When the trend starts to reverse and be lower highs, lower lows, and I have defined risk, I will put a name like this on, and as long as the trend's paying me, and as long as there's a reason to want to be in. So you have to ask yourself, are we extended from any of these time frames, right? So right now we are extended from the 120-minute 20. That would be the first target. But what do I want to see? I want to see us get away from it first. Let's see a big old spike into 300. Get a substantial push so that there's meat on the bone, right? Like, if I want to use the 120-minute 20 or even the 60-minute 20 as my target, I want to get as far away from it as possible first, so that when we do get the retrace back, the risk reward was phenomenal. You always want your trades to be as asymmetric as possible, guys. So the higher the better on it. Make sure I'm not trying to guess a top on it. I'm looking for a clear change in the trend. And, you know, the sector's hot, right? It's part of the solar, semiconductor, energy sector. So, like, it's got a lot going for it. It might go a lot higher first. I'm not trying to guess a top. So that's it for my list. I'm going to go ahead and see if there was questions. We'll kind of address some questions, and then I'll be enjoying the rest of my weekend, guys. Let me see here real fast. All right. Don't you look for trending sectors? This is from Dan, by the way. Dan Kircher says, don't you look for trending sectors before focusing on individual stocks? Yes, 100%. And hopefully you saw that, right? Like, we did the sector analysis, and then we talked about why some sectors I might be interested in for long. Some sectors might lend themselves better for short ideas, and, you know, that's kind of the point there. So Dan also says, gold continuing to the upside with an overvalued peaking dollar ? I don't trade commodities, and I don't, I will follow gold from time to time, and the US dollar as well, and not a lot of different Forex pairs at all. But I don't trade them. I will look at them and try to ask myself just very broad questions, right? I'm not trying to make predictions based off them, right? And again, really, I don't try to make predictions, period. I try to just make if-then statements. If something is to happen, then I will do this. And my risk would be here, and my target is here. So again, I think, so if you're asking me, do I think gold can go higher? Yes, but I also think it's getting a bit extended, right? We just had 3 days up. If I had to ask myself where I think we could get to, it's probably up here to the underside of the 50-day in this 168.30 area. But again, like, I don't follow it as close as a lot of other people because I don't trade it. I just use it just to get a better kind of a well-rounded look of the macro. Hope that makes sense. Susanna Valdez, Rick, I am holding mRNA from 154. Do you think I should still hold it? First of all, I don't give advice like that. But I did just talk about mRNA, right? And what's funny is I didn't read your question before giving the analysis on it, but hopefully, like, what I talked about with my view on mRNA helps you a little, right? Like, I like it for a long. Now, I don't know what your plan was, but my advice to you, which is not financial advice, is that you stick to your plan. And I hope you had a plan. And if you don't have a plan, you need to come up with one and then stick to it, right? At this point, you're up on the trade, so at least you're green on it. But you gotta have a plan. I personally am hoping for a flush to scoop some because I think eventually we're gonna break out of this and get another leg higher. But I can be wrong. Okay, I totally could be wrong on this, and let's just look at it from an objective point of view. If this breaks last week's highs and can't get back to this 182 area, I wouldn't want to still be in it under 150. That's very broad in general, and again, it's not financial advice. That's just me personally. If we break last week's highs to the upside, obviously you can't break the highs unless you go to the upside, but if we break last week's highs, I wouldn't want to stick around if it fails to get to 182 and then we break under 150. So again, I can't give you that kind of advice about what you should do with a certain investment, but hopefully that can sort of help you a little bit. Dan says CELH up 20%, 27% on the year. Great chart. Too lightly traded for you, probably. I think it is. It's pretty thin, right? Yeah, not even 1 million shares per day. And yeah, very nice chart, trending really well. Dips can be bought, and listen, I'm not ever going to tell you guys that you shouldn't trade something because of the liquidity. That's personal, right? I personally prefer 2 million shares per day on average, but I'm also a day trader. So like if it's a swing trade, a lot of times you don't need it to trade that much, right? So if you're and same thing with range. I like things that have a $1.50 ATR minimum, but that's because I trade it on a day trade. You could trade something with a 25-cent range. If it's uptrending and you're going to hold it for a month, well, guess what? You can make points on something that has a 25-cent range, right? So again, don't think that just because it's what I would consider low liquidity or a thinner name that you shouldn't trade it or have a position in it or look at the chart. But yeah, I think it's a great looking chart. Definitely might have some issues as we approach some of those recent highs, but yeah, nice curled bottom there. Calvin Williams, any thoughts on Roku potential reversal move? No, listen, Roku I had really high hopes for. I think I tweeted about it. I wanted an inside month. I was hoping that when the earnings came out, we would still be somewhere in here, and then so that would give us an inside July, meaning the high and the low was inside June's range. I was hoping we were going to get an inside month, and then August I would look for a break in either direction to trade it directionally. But with the way it broke down after the numbers came out, people ain't happy with it. Now, I think there's probably it's one very liquid, very good range, so it's a great trader, and it's hard for me to short anything that's nowhere near even the breakdown levels. If I was going to short this, I would need at least 72s probably, right? Maybe 70 because it's the round psychological level on the previous quarter's quarterly. But I'd like to see it push into those lows that it lost, and if not even higher, right? Like 78 to 80 would get me interested in the short side. So it's not like I'm saying I'm short biased. I just don't want to be like, this reminds me of Snap. Like I don't want to be trying to buy Snap. It just looks like dead money now. Cristobal Cardona. Sorry if I mess your guys' names up. Hi Ricky, what's your opinion on PPL gap down or up as per chart? Not one I ever trade. Again, this one, the reason I don't trade this one is because of the range, but I think we're getting a bit overextended up here. Utilities, like if I was going to trade utilities, I'm trading Duke or AEP. They're the ones that have like the better range and the liquidity, and so I like basically the same thing I would look at with them on PPL. I just think we're getting extended, but the higher the better. I'd say into that 30 area. You got your quarterly, monthly pivots, the recent highs up there. So any kind of like overextension up into those levels would be where I would look for it to find resistance and look for a possible fade. But kind of in no man's land here. If it were to gap down, I think it probably finds support. And I wouldn't really be interested in shorting it if it gapped down. But again, I don't trade it. But if AEP or DUK were to do something similar, right? DUK up into 114, I'm probably looking to fade that. AEP up into 102, 103. I'm looking to fade that, especially if it gets there fast, right? A lot of what I do for day trades is based on speed of the move, right? If something can move somewhere far and fast, like that emotional factor gives me the edge that I need. Hope that makes sense. Nikki Jackson, how would you trade SE? Maybe short? Question mark. Yeah, I was trying to short it last week in a 79. So now you got two recent highs up there in the 78.50s. If this were to reverse and come back in, then I'd probably look pops into the underside of the 20-day, maybe into this 76 area. If it doesn't, if we gap up, I'm looking for 80. You guys can see I have an alert up there, right? It says fade. That alert's still there. And actually, let me make sure it's still valid. It is, okay. So yeah, 80, 82, 83. I'm looking to fade SE. So, and that's one I trade a lot. I love trading SE. So thank you for that one, Nikki. All right. I think that's all the questions. I mean, I'm reading a thread in a Slack channel, and my guys are posting the questions in there. I hope you guys get some value from these things. I had a lot on my plate this weekend as far as back testing the data that I tried to show you at the beginning. I'm still, as soon as I get done this, I'm working more on that, guys. But I'm telling you, this business that we're in, this job that we do, the people that put in the work are the ones that reap the rewards. There's no effing shortcuts, guys. There isn't. I mean, it sucks to say that. I wish that I could. What's funny is like I could give you guys my spreadsheets and it wouldn't mean jack crap to you guys because you didn't. It's the work. The work is the key. It is the shortcut, even though it's not a shortcut. But the work, the grind, is how you succeed in this business. So. Hope you guys hope you guys get the value out of these Sunday preps. Please check us out over at TrueTrader.net. You can use the coupon code YouTube, and there's even one, I think it's long haul in all caps. You get some pretty ridiculous discounts. There is like a 5-day trial for I think $30, but check us out, guys. If you guys don't understand the stuff I'm talking about in the Sunday preps, if you need more clarity, if you want guidance on how to develop a system and define things black and white and make rules and manage risk, do yourselves a favor and check us out. And I'll see